If there was a stock or fund that beat the S&P 500 over the past month, year, 5 years, and 10 years, would you be interested? As you probably guessed from the thumbnail, I'm talking about Bitcoin. The problem for retirees is that it's too volatile and it doesn't produce income. Bitcoin income funds solve this with monthly income, and today we'll look at how my two favorite funds held up during the recent tariff chaos and how they stack up against the competition. The S&P 500 has staged a surprisingly good comeback from the tariff chaos of April, but not as good as these Bitcoin income funds. April 9th was when the market freaked out the most, and the Bitcoin funds actually fell slightly less. They also went on to a far more impressive recovery than the S&P 500. Bitcoin is still a risky asset, and I wouldn't want to be overexposed to it, but I'm starting to wonder if my 2% allocation should be more like 4 or 5%. My last Bitcoin income fund update was in December of 2024, and since then I switched from MAXI to BTCI and BITO. Today we'll look at why I did that and how these two funds have performed since BTCI was launched in October 2024. I'll also explain the differences between them and why I hold both. Let's start with the income. These ETFs have been paying out a lot of cash recently. BTCI distributions are the more consistent of the two, and it's designed that way. Here's what the fund's co-founder said about the yield.
We're targeting a yield roughly of 25 to 30% for BTCI. And again, that's really because of the volatility of what Bitcoin allows us to do to generate income for the fund.
If we take the most recent monthly payout of $1.26, multiply it by 12 months, and divide into the $56.38 price, it annualizes to a yield of 27%, which is right on track. By the way, if you're new to the channel, I retired in 2017, and that's when I got serious about researching my investments in greater depth, and this channel is where I share what I learn. I mostly focus on stocks and funds paying consistent yields of 8 to 12%. Today's ETFs have been paying, well, a lot more than that. If you'd like a copy of my portfolio, it's available via Armchair Insider, link in the description, it's free. The BITO distributions literally look like a roller coaster track. I prefer consistent income, but the annual cash flow is so good I've been willing to accept that variation. The yield is currently quoted as 62%, but obviously that changes, sometimes wildly, each month. Even if we annualize the most recent 54-cent distribution, which was relatively low compared to the past year, it still annualizes to a yield of 32%, which is crazy high. Snowball is handy for distribution charts like this, but I mostly use it to combine my stocks and funds from 3 brokerages into one dashboard. I can rank by yield to see how I want to rebalance my portfolio, and the calendar function lets me see how many dollars will arrive on any given day of the month. Link in the description for the Armchair income discount and a free trial. Total return combines distributions and price movement, which makes it a useful way to compare investments with different yields. BTCI is the newer of the two funds and was launched on October 17th, 2024. We'll use that date for our timeline. Let's start with the S&P 500 for a little perspective. It's down slightly since October, while the two Bitcoin income funds have been on a tear. Next, we'll compare to the other Bitcoin income funds I covered in the December video. YBIT and YBTC are a good 10% behind, so I'm glad I didn't buy those. Last but not least, we'll compare MAXI. It's currently ahead by a nose, but the ride was fairly wild. Look at the worst day, April 8th. It was down more than 21%, while the other two were up. That's a 30% delta. The reason I sold MAXI was that the strategy changed, making it difficult to understand exactly what I was holding. If we look at the current holdings within that fund, it doesn't just invest in Bitcoin. It also holds options based on gold, MicroStrategy, the NASDAQ 100, the Russell 2000, and the S&P 500. The other two funds are much simpler and more closely aligned with Bitcoin. Bitcoin doesn't generate distributions all by itself, but there are ways to turn its price action and volatility into distributions. Let's look at the different ways these two funds generate income. BITO doesn't hold any Bitcoin. Instead, it replicates the price action of Bitcoin by entering futures contracts. Those contracts aren't purchased for a fee. Instead, they're guaranteed by collateral. It's a bit like doing a home equity line of credit to buy a second house. You use your first house as collateral instead of saving up all the cash to buy the second one. In this case, the collateral is US Treasuries, whereas options give the holder the right but not the obligation to buy or sell an asset. Futures are different. They're a very specific obligation to buy or sell an asset at a specific price and time. The value of the futures contracts moves up and down with the value of Bitcoin, so they're a fairly good proxy for Bitcoin price action. If the price of Bitcoin increases, those futures can be sold, aka rolled, for monthly profit. Bitcoin pricing is volatile, and as we saw a moment ago, so is the income of BITO. The distributions are taxed as ordinary income. NEOS specializes in options, so as you would expect, their BTCI Bitcoin fund uses options rather than futures to generate the distributions. Step 1 is to replicate the price of Bitcoin by trading options on a Bitcoin index. MBTX is an index based on spot Bitcoin ETFs, so it's a good proxy for the price of Bitcoin. They do this by selling an MBTX put and buying an MBTX call at the same strike price and expiration. The result is that the net value of those two options replicates the price action of Bitcoin. The income is created by selling out-of-the-money call options on MBTX. So that's a lot of information. But to summarize, they sell a put and buy a call to replicate the price. Those two cancel each other out and don't generate any income. The income comes from selling additional call options. Selling those options generates income today in exchange for giving up some of the potential appreciation of Bitcoin in the future. Let's take a look at the holdings in the portfolio to understand the rest of the strategy. The treasuries act as collateral for the synthetic option strategy. They also contribute a tiny amount of yield, well, tiny compared to what Bitcoin generates. Then there's HODL or HODL. That's a spot Bitcoin ETF. HODL holds actual Bitcoin in cold storage. This asset doesn't produce income, it just tracks the price of Bitcoin. I don't normally like to hold funds this new, but I'm familiar with NEOS and the way they use options to generate income on indexes. A reminder that any fund less than a year old confuses the yield formula on most websites. So Yahoo Finance shows no yield, Seeking Alpha shows 17%, Snowball shows just under 27%, and the NEOS homepage shows 27.82% because they're using different formulas and potentially slightly different dates. So if a fund is new like this one, it's best to check the fund manager's website for the yield. Tax treatment for BTCI will vary depending on the year, but generally it's far more tax efficient than BITO. Per the most recent 19A statement, the majority of the income is estimated to be classified as return of capital. While researching these funds, I found Nicholas Bratto's analysis of BTCI the easiest article to read. Some of the other articles focus too much on the crypto angle and authors predicting where they think Bitcoin's price is going. I don't really care about any of that, and Nicholas is skeptical about Bitcoin, so it came across as unbiased. I'll link to his analysis, which is on Seeking Alpha. I'll link that in the description. I don't buy or sell a stock or a fund without first reading articles like this one on Seeking Alpha. I'll also include a link for a free trial and a discount. The reason I hold both of these funds is that it's too soon to know if the option strategy is better than the future strategy or vice versa. One outcome that Garrett pointed out in the interview is that when Bitcoin is surging, his competitor, BITO, will pull ahead. We can see examples of that if we look back at the past 3 weeks. And then if we go back further to late January through early April, when Bitcoin was headed down in price, you can see that BTCI was pulling ahead. If I hold both, it smooths out the differences. Bitcoin-related funds have done well recently, and they've done well over the long term. But there are periods when Bitcoin pricing just falls off a cliff. For example, in late 2021, it dropped from $64,000 down to $16,000. Unfortunately for BITO, that happens to be when they launched the fund. If you bought BITO back then, there were a few years when it was deep in the red. It's back to positive now, but it shows how volatile it is and how timing affects your returns tremendously with funds like this. This is why, as a retiree, I don't want a large allocation to these funds. Also worth noting is that Bitcoin funds underperform holding Bitcoin directly or holding spot Bitcoin ETFs. If you bought Bitcoin directly during that 2021 peak of $64,000 and you held it all the way until now, you'd actually be substantially ahead of the S&P 500. So if you don't need the income, that's a better way to go. YieldMax's MSTY yields more than 100%, which sounds impossible. It's based on MSTR, which is Bitcoin on steroids. Strategy, formerly known as MicroStrategy, borrows money and issues stock to buy more and more Bitcoin, and they currently hold more than $50 billion worth. Strategy has also issued STRK and STRF preferred stocks that yield a more sensible 8 to 10% and obviously come with far less risk. I'm currently researching all three, so if you're interested in a video on those, let me know in the comments. The first question to ask is whether you want anything to do with Bitcoin at all. Warren Buffett doesn't like it, but he's a value investor, and Bitcoin obviously isn't a value investment. He also doesn't like to invest in real estate, but that doesn't mean real estate is a bad investment. I hold these funds because they offer some diversification from the S&P 500. I would also argue they offer some diversification from the US dollar, and they're not directly tied to tariffs. There's considerable downside risk in terms of price volatility, as we saw, but I consider the upside to be greater than the downside. I have 1% in each for a total of 2%. Going forward, I'm open to expanding that to, say, 5%, buying on dips in the future. If you want to learn more about how BTCI uses options to generate income from Bitcoin, click here for the interview I did with the co-founder, Garrett. That wraps it up for this Bitcoin Income Fund update. More Armchair Income coming soon.
Armchair Income.